Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right. Good morning, everybody. Welcome back to another live stream. And this is a big one. We're here early, starting early today for the NFP report, as well as the market sell-off that we're seeing this morning. In fact, I need to just double check that bear with me. I'm going to just check that the YouTube title and thumbnail all make sense because, again, we've got a big one today. This is a huge live stream. How are you guys doing? How are you holding up? I hope you're okay. It is a crazy, crazy time. A lot of people in this kind of market, they get themselves into a lot of trouble. So I just want to also add to the plus NFP news. Okay. Sorry, I'm just changing the title of the stream and we should be good. I'm going to save that. Okay. Just a heads up, you saw that in the opening. If you're interested in getting funded with DNA Funded, check them out. They are a sponsor of our live stream here, and with code A1T20, you get 20% off any of their challenges. It's a pretty sweet deal they've got going for our subscribers. So check that out, and let's get into this. We've got probably one of the biggest sell-offs that I have seen since 2020. This actually feels very, very uncanny to the 2020 sell-off that we saw. And were you guys trading during 2020? I mean, it's kind of weird because to me, it doesn't feel like that long ago in my trading career, but it actually has been, it's been 5 years. And I'm curious if you guys have traded, if you traded in 2020, then you may be familiar with this type of feel that we are experiencing right now. It's a rapid decline, and it feels like nothing can stop the freight train selling. That is kind of the vibe of 2020, and that's how it feels right now. These are the moments that really will test a trader or investor's resolve. And this is why, again, nothing about financial markets is easy, right? If you're a trader and you stopped out of an idea, you probably feel like a hero right now, right? If you're sitting in this kind of sell-off. I mean, this is 2020, but it feels very similar to 2020. Look at the sharp angle that we had in 2020. And now we jump back to today, and you can see a similar trajectory, a similar sell momentum is occurring in this market. So did we hit the 20% dip? Maybe on the NASDAQ. Did we hit that on NAS? Yeah, we did. 20% for the NASDAQ. Guys, if we close below 20% from peak to trough, that would put the NASDAQ in a technical bear market. Now, the S&P 500 is still a ways off from a technical bear market. Take a look here from high to low. You're talking about a 16% drop. But I think what's kind of head dizzying about this sell-off is just the speed at which it's taking place. Like I said, in the COVID pandemic sell-off, it was like this, where it was just straight shot to the downside, push to the upside, and then it just kept going and going and going. And then all of a sudden it was like Fed stepped in and the market kind of bounced and then just started kind of a V-shaped recovery. So the question is, is this a time where you want to be stepping in and buying stuff at the lows, or is there going to be fresh lows? Because I'll tell you what, I've been saying on my channel, I'm not going to shy away from it. I've been buying stocks that I like in recent times. Right? Clearly, with hindsight in my favor, I should have started buying right there. But I don't know, where the bottom of this sell-off is for longer term positioning. I don't really try and time it too much. For longer term, like stocks that I buy and sell, it's really more about like, do we look oversold? Okay, great. Do I like the company fundamentals? If so, yes. All right, then I'll buy some, and I'll continue to add to those names if they continue to go down. But that's where most of us are here for, is more for the trading side of things. And from a trader's perspective, right? The S&P 500 has given you a clear signal that the path of least resistance at this moment is to the downside, right? You've got the VIX up again, 38% today. You are looking at a 41.5 VIX. That's crazy. So when you see market sell-offs like this, what do you do? Well, the answer is, if you don't have a system in place, right, you're pretty much toast. Like if you don't have, there's going to be a lot of people, I know I have to speak sensitively because again, some people are getting absolutely devastated today, and that's understandable. This is a crazy market, and a lot of people are going to learn painful lessons. But right now is a good moment if you are, feeling the agony of being on the wrong side of big moves. If you are not leveraged, you're very thankful. If you're leveraged, you are very, you know, you're in trouble town. Because again, if you have leverage, if your margin, if you bought a bunch of calls, or if there's any degree of margin or leverage in your account right now, and you are trading the indices, or many portfolio people who buy stocks, they like to do so on margin, they like to get aggressively. This is a point where this could be a humbling moment for a lot of people, and that's how these types of events go. This is gone on for hundreds of years in the stock market. Big sell-offs like this flush people out. They, people blow up and they move on. They say, no, the trading's a scam. So that's why, I brought this up. Why are you so early? Because, I saw the market making this move and I just said, let's just jump on the stream. I'm holding up okay with all this. Some of you guys may know, I'm definitely not making money. Like I'm down, just like most people who have portfolios, I'm down a good bit. But I'm down less than the S&P 500 today, simply because I had some long trade ideas on the NASDAQ. You guys may have seen that if you were watching the videos. I stopped out of them, and I'm so glad that I did, because look at what happened since. As soon as we put in this lower high, that was just a red flag. And then with the tariff announcements that completely were worse than expected in terms of the nominal amount of tariff percentages. And then this morning, right, we wake up and sure enough, China retaliated, right? China responded and said, okay, we're going to match your tariffs back on you. And so what does that tell the market? That tells the market there's clear escalation here, right? That's a trade war, right? That is the signs of US and China digging in, right? They are both digging their heels in. They're going to fight, right? That's what the market sees. Is there a possibility that there's a phone call that resolves all this? And it's looking less likely. And that's why I think the market is just absolutely tanking, is because the probability that there's, part of me thinks like, okay, look, if the resolution was going to be swift, it had to be preemptive, right? What I mean by that is that the call between President Xi and Donald Trump in terms of the China-US stuff had to be preemptive, right? It had to be ahead of the curve. But now that both have kind of stood their ground and made their statement, it will come across as weakness for either party to pull back, right? To pull back their way. So we saw this in 2018, and we have some similar playbook stuff here. But there's something I have to think about with you guys, which is, okay, in 2018, what did we see with the trade war? In 2018, we saw a pretty violent move lower of about 24.5%. But here's the challenge with this, and hear me, let me be real with you. I'm not a bear on this market because I don't really like to short indices, but also I'm definitely not chasing them aggressively to go long right now, because again, we saw a 24.5% sell-off the last trade war, and it was really just US versus China. What is going to happen this time around when it's the US versus like the whole world? Thailand, China, Vietnam, European Union, Canada, Mexico, Japan, Germany, like all these different countries that are trade partners of the United States are in the sights of the US. And in retaliation, we could see some pretty ugly stuff. Now, let me say one thing about this too. Most people who are, let me just speak to the investors in the room for a second. Do you know why you always hear the common expression buy low, sell high, and it's kind of a meme? It's because you think you're buying low, and what happens? Sometimes you buy low and it actually goes much lower, or you think you're buying low here and then it goes much lower. But one thing that I've found in my career of doing this over the years is that people actually don't buy low, sell high because of what I just said. They think they can wait and get better prices, right? That's what people investor wise think. Now, if you're a trader, again, we'll come back to the trading concepts in just a second, right? But investors oftentimes want to buy stuff high and they don't even realize it. They buy high and sell low, right? It's so simple, but bear with me on this. These days, you say, hey, I think I'm going to go buy a bunch of stocks. You sound crazy, but those are what the greatest investors of all time do. Okay. So a portion of what I do is investing. A portion of what I do is trading. The investor side of me is going to plug my nose and buy some stuff today. The trader part of me, right, the short-term accounts that I run are not going to be buying stocks because I think they could keep going lower. I'm not going to short them either because, again, it doesn't really suit my trading style and my strategy very well. If you know my strategy well, you know I like to trail stops, and indices, the way they move lower, are very they don't give me a lot of structure on the. It's hard to explain, but when the market is trending up, right, it typically does something like this, where I have very clear kind of steady up moves and then higher lows, higher lows, higher lows, and I can trail a stop pretty evenly. Like this is pretty easy to trail a stop behind, right? This is hard to trail a stop behind because you don't get very many kind of like structural, like normal kind of clean moves like this. You get flushes, right? So I find this very difficult with my style of exiting positions to take. So my closest thing to shorting the market that I get, which is what I'm doing right now, by the way, is holding cash. I have like 45% cash in my portfolio right now. So I have capital to go shopping here, which I'm thrilled that I've been patient enough to stay disciplined and not buy all my stuff up here, right? So I've got cash to go shopping. And the other thing I do is I trade currencies and I trade commodities. So I focus on other things. That's how I quote unquote short the market, is I don't short it. I just do other things. Each person has their style. There's people in this room right now who are short this market and making a ton of money. And I applaud you. Congratulations. That's just not what I do. And there's nothing, people always ask, Nick, why aren't you shorting this thing? There's money to be made here. And the answer is because, like I said, it doesn't fit my style. And I also have never really made great money shorting the markets. It's a very difficult trade, right? If you're right and you're early to a short, you make crazy money, but it's very difficult to call that, right? It's very difficult to call a sell-off because it's usually very short windows of time that the market sells off, and then these gradual up periods. So it's just not very suitable to my trading style. That being said, again, like I said, there's other ways to quote unquote be short the market or be cautious on the market. Like, for example, keeping a large amount of cash in the portfolio, meaning unused margin if you're on an FX brokerage, right? Just keeping a small positions and waiting for better opportunities. Like those are ways to be quote unquote short without actually being short the market. It's like a proxy for shorting. Anyways, that's personally what I've been doing. And it's why right now the market's down like 2.73. I think last time I checked, I think I'm down like 2.3. So still down, right? Still an ugly day out there, but I'm faring a little bit better than the market itself, which I will take right now. Because again, a lot of people who have very high tech portfolios are down 5-6% today. So we'll see, but it is a crazy day in markets. Let's just take a look at where we're at here, right? So you got SPX down at one point almost 16%. Absolutely entering into kind of a sell-off moment. But here's the thing too. On a technical basis, what is a bear market? A bear market is 20%. So S&P 500 is technically, I would not call this in a clean upward trend by any means, but we still have room to go lower before this is even considered on a technical basis, right? Technical basis, what I mean by that is the kind of accepted expression for a bear market is 20% or greater from the highs is a bear market, right? So we're getting close. We're not quite there, but you know what already hit it? The Nas. The Nas hit. You ready for this, guys? We hit 20% down in the NASDAQ. But, right? And this is the big thing I'm thinking about here is how do we close today? If we close below 20% down, then again, officially the NASDAQ would be considered in a bear market on a technical basis. Okay? It's a crazy time. So here's what I would say to people out there who are like, oh my gosh, I've never experienced anything like this in markets. It's understandable that today or yesterday would have your head spinning, right? You're like, oh my gosh, I've never seen a market like this. And, I've done this for a long time, and there's a serious benefit to having been in environments like this before. And I can try and do my best to share with you the experiences that I've had and how to handle these moments. The first thing you can't do is you can't panic. You cannot panic, right? If you're going to panic right now, if you're scared, if you're terrified, you should just get in a money market account and you shouldn't trade and invest, right? But like if you can't handle the drawdowns, if you can't handle some extreme movements in markets, there's a couple things that you can do. One, you can not trade, right? A lot of people are going to quit trading right now. I'll tell you that. That's what happens every time. Big market sell-offs cause people to say, this is a scam. This is stupid. I'm done with this. It's a ripoff. Not always, the smartest thing, but here's the other thing that I want you to think about, okay? The other thing you can do is you can reduce position size dramatically, right? And I did that a couple years ago because I have a unique perspective in the sense that I have to do this every single day on camera. Think about let me vent to you guys for just a second, right? My job, I have a day job. I'm a content creator in the trading space. I share my experience. I share this is a day job for me too. Well, during this day job, I have to look at what's happening in the markets. And if it psychologically messes with me to look at the markets, I can't do my job effectively, right? And that was actually low-key one of the biggest benefits biggest changes that I ever made was because I was like, okay, I have to be on a camera and talking about this stuff all the time. If my position sizes are too big, it psychologically affects my ability to do my job. I have to reduce my position sizes. I accidentally, by doing that, made one of the best trading decisions of my life, which was to reduce my position size to the point that it doesn't hurt me psychologically to discuss this stuff when the markets are down a bunch or the markets are up a lot, right? So what I would encourage you as at home to do, I know you're not necessarily, maybe you are, but most of you are not content creators in the trading space, and that's perfectly fine. What I would encourage you to do though, is think about this. What position size are you comfortable staring at the markets every day? Because it's, again, trading is also a job. If you have to look at this stuff every day, if your position sizes are too big and it hurts you to look at, that's a signal that you're risking too much and that it's not a sustainable method for you. If you're going to do this 10, 15, 20 years, moments like this can't wipe you out, which means you have to reduce your position size. You have to be practical. You have to be slow and steady. You have to be patient, right? So if this is your first time experiencing a market like this, it's kind of like getting pushed out of the nest for the first time. Like, I can't do the work for you. I got to push you out of the nest, and you got to fly or fall. That's the reality of a market sell-off like this. But this is, like I said, this is probably the most real sell-off, the most real violent sell-off that I have seen in a number of years in this market, right? So 2022 was pretty bad, but it was, it's kind of like a slow motion. It's still violent, right? Violent, and then you'd have rebounds, violent rebounds. This is a rare type of market move, which is straight down, right? Right now we are seeing a straight down market, and it feels a lot like 2020. So again, what am I going to do in all this? Well, for the long-term positions in my account, I said this earlier, I'm going to watch my favorite stocks and I'm going to plug my nose and buy some stuff today. I'm not going full leverage, I'm not going margin, and I'm not giving you financial advice at all. That's what I plan to do. I'm going to probably buy some stocks today. Because again, I think over the long term, if you have a 3 to 5 year vision on some stocks, there's probably some good deals out there. But that's my opinion. I could be dead wrong. We could see the stock market go down for another year. It wouldn't be out of the question. Let's take a look at some other markets too. Dollar index, pretty flat here today. VIX up 37%. Gold down a little bit, but holding up decently well, right? In all things considered, you got to think if you're somebody who parked your portfolio in gold this year, you are looking like a hero right now. If you chose gold over tech stocks this year, like a lot of people, a lot of people who watch these shows have a portfolio. Now, there's traders and there's investors, there's position traders, there's all sorts of different people. But can I just ask the audience really quick? Do you in the audience, if you do, type yes or put a 1 in the chat. Do you have like a portfolio? Do you have a stock portfolio? Do you have a 401k? Do you have, type yes if you do, right? I know a lot of traders have they have like a margin account or like a trading, active trading account, day trading, swing trading. But I'm talking about like, do you have a portfolio, like a stock portfolio or a 401k, a Roth, whatever some portfolio. I just want to show you something. For a couple of years now, most of us that have portfolios, right, have gotten beaten by the NASDAQ and tech stocks. They've just been straight up and to the right. Until recently, it's like the revival of the diversified portfolio. If you had gold in your portfolio, right, gold absolutely has been putting in work for portfolios. Value stocks have been putting in work. The reason I'm getting at this, international stocks have been putting in work. This year, if you are all leveraged US stocks, especially if you're US tech, you're getting crushed. If you're diversified, if you have long gold, if you have long silver, if you have long European stocks, Chinese stocks, Japanese stocks, US stocks, the diversified portfolio this year, guys, has made a serious and visceral comeback. So just something to think about. If you've been an investor, if you've been somebody who has a portfolio, these are times where you got to be thankful if you have some diversified stuff. Like if you have a little bit of bonds, if you have a little bit of gold. I mean, look at gold. Gold has held up really well. Let's talk about it from a trading perspective now. Trading perspective, I like the momentum. I want to be gold long, right? I've been trading gold long this year, silver longs. Look at silver, by the way. Silver completely looks broken, right? What happened here for silver, right? I was long silver. I stopped out, trailed out of the trade, so I'm no longer in it. And thankfully so. I mean, look at the violent price action that we have now seen. What was these key levels of support completely gave out, but gold silently and steadily holding its gains. Just really impressive. Like there's different, when it comes to investing, right? And I know I keep jumping between the two topics here, but bear with me. From an investing standpoint, I like to buy stuff that I think is undervalued, on sale, and kind of forgotten in the hopes that it will revive. But that's a really hard thing to time, right? Like if I think Apple, right? Let's just give you a really quick example. Let's say I think Apple's going to figure out AI. I think they're going to be a beast company at some point, or they are a beast company, right? But they've been really forgotten. They've been really hated. And look at this. They're down again. They were down 9% yesterday. It was down another 4.5%. This would be more, in my opinion, a investment, right? This is a company that is counter trend. It is downtrending right now, right? If I were to buy this thing for the next 5 years, I don't have to necessarily be super right on the timing. It could go down for a little bit, and then eventually I think it will move up. When it comes to trading, however, I don't trade that way. I don't trade when it comes to like a momentum strategy with a stop loss. I like to trade the winners, right? So the winner right now is gold, right? If you're looking at the NASDAQ, is this the winner? No, this thing's the loser right now. This thing's getting killed. Could change, and I hope it does. I have a lot of tech stocks. I would like to buy some more tech stocks. So if it keeps going down, come to Papa. But when it comes to gold, right? Gold is a relative winner. You might say, well, Nick, gold's down today. Yes, but think about this. Where are people going to go if this trade war escalates and people are concerned and central banks start having to print a ton of money to save the day again? Where are people going to go? My view is gold, right? So I like gold a bit or a lot. So I'd like to buy a bit of gold if it pulls back, I talked about this yesterday, missed my entry, didn't quite come down to it, but I think I'm going to give this a shot on the long side at the 38.2% retracement. I hope we get a sell off down to that point so I get a trade. If that does not work, I'm going to look around this 61.8% retracement around 29.50 and see if we can get a trade there. Right? So I like I like gold to the long side. I'm going to continue to watch this. I think that it has room to pull back here.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder.
Sorry about that.